September is going to be a very interesting month for gold investors. Why, you might ask? Well, there is a very big chance that we might be getting a rate cut in September, and therefore this will influence gold in a very particular way. How, you might wonder? Well, stay tuned. We're going to continue right after the intro. Hello and welcome to yet another video from Bloomberg Capital. My name is Patrick, and today we're going to be discussing the short-term gold price action. So far, price has attempted to reach above its high, as you can see, but it was currently rejected. And now we are getting some fundamental news that a rate cut is very likely on the horizon, and the market is currently pricing it in with a likelihood of 98.7%. Additionally, we could see a double rate cut, which has a likelihood about 5%, now currently trading at 1.3%. Now this can always change, but the 98.7%, that's a very fair number to assume that we're going to get a rate cut. So how could this influence the gold price action? Well, we have to remember our fundamental factors. First, what is happening at the background? So currently, central banks globally are buying gold at record levels still, over 1,000 tons annually, for instance, in the last 3 years straight. This means that the demand is still very strong, and the long-term confidence in gold as a reserve asset is still thriving. Furthermore, we are in a global easing cycle when it comes to liquidity. So everywhere around the world, central banks are injecting liquidity into the market to support them, which typically boosts anti-fiat prices. This means anything that isn't money, that is hard money or that is considered as hard money, is going to rise in price. This would further boost Bitcoin prices, it would boost silver prices, and also gold prices, of course, because it's one of the largest, if not the largest, anti-fiat market. Additionally, now we have our outlook that interest rates are going to get lowered. This means more liquidity into the market, therefore more money that will be devalued, and therefore higher gold prices to come. Additionally, we still have geopolitical reasons that have a little bit of uncertainty that demand safe haven assets. For instance, the conflict in Ukraine, the Middle East, and the rising tensions between US and China would boost additional hard assets. Therefore, gold should also rise if we take this background information in mind. So let's continue. If we know that the fundamentals are bullish, and we have been always bullish since 2023, how can this affect the technical price in the short term? Well, before we get into this, I just want to highlight that we offer such analysis and much more in our Discord server, and you can join there for free in our community chat. There you can ask your questions, have a chat with us, and discuss many assets on an instant messaging service. Furthermore, if you like our premium offerings, we do offer lots of trade setups. We do discuss macro conditions, and our performance over the last 5 years was never less than 38%. So you definitely want to check that out. We offer pretty much everything from the S&P 500 and NASDAQ 100, and this means individual stocks, Bitcoin, Ethereum, and altcoins. For instance, the ETH run we also did catch at the 1645 level, as you can see. Therefore, it always pays to have someone that is really great at the markets and can help you with your investing journey. So I encourage you to join our Discord and interact with us. All right, now to the price. So what we saw here was a very strong rally into the peak that marked the sideways range that we have been in for many months right now. And we have been attempting to push higher in the last week of July. However, this failed, and then we pushed down. Quite a bit of a local aggression there, but still nothing much to really speak about, since the downside has been really mild. Gold really didn't want to sell off here, which indicates that there's a strong demand still in the market, and it's not allowing the prices to fall down any lower. However, due to this local failure, I can see a retest of the 3,200 level as very likely. However, what happens after that is what I would consider magic, because after that, there shouldn't really be anything in terms of sell walls around the high of this level. So a 3,200 buy entry could result in a price rise up to about the 4,000 level, which is, if one wants to buy the dip at the 3,200 level, of more than 25% from here. Therefore, it makes a lot of sense to pay attention to gold, especially if you want to invest in it for the longer haul. We do believe that it's in a secular bull market that should last many, many years, and any dip here is a good opportunity to load up so you can benefit from rising prices. I hope you enjoyed this video and learned something new. If you liked what you saw, please leave a like and share this video, and I will see you next week or in the Discord. This is Patrick with Bloomberg Capital. Until next time, goodbye.